So make sure if you've got any questions along the way to store them up. I should have a little bit of a time at the end to cover anything that you would like to discuss if you've got anything burning. Today, I just thought it would be nice to kick us off by getting everyone onto the same page, diving into where the industry stands today and where we're going, both in terms of installations and also in terms of service strategies, before finishing by discussing the key opportunities and strategies we're seeing for digital technologies. But before we get there, just a quick word about BloombergNEF. So we are a research house covering global commodity markets and the disruptive technologies that are driving the transition to a low carbon economy. So as I said, I sit in BNEF's wind research team, and we cover topics from cost trends, operational strategies, installation forecasts, a number of other things. So just to kind of set the scene. So on the chart here, you can see global onshore wind installations, both historically and then our forecast out to 2030. And what you can see is that last year, the first thing that jumps out to me was a big year. It was a record year of installations for onshore wind, and that was driven by the two largest onshore wind markets globally. So that's China and the US, as subsidy phase outs in both markets really drove installation booms. So this year, installations will fall somewhat, but we'll see European and Latin American markets install more capacity than in 2020, as projects that secured subsidies through auctions begin to come online in force. But going forward, we particularly see China driving a lot of the onshore wind growth that we're set to see this decade. But focusing on the US for onshore wind, after two record years of build that we saw last year and we're going to see this year, we expect installations to drop off a little from 2022 as the production tax credit continues on its phase-out schedule. Now, while we expect installations to pick up a little bit more towards the end of the decade as some kind of fundamentals fall into place, there's a bit more of a shorter term upside. And I know that many in the renewable energy sector will be watching this reconciliation bill that's being debated in the Democratic Party at the moment, which could provide a lot of shorter term upside if we see an extension or even an increase in the production tax credits value. Now, moving to offshore wind, we're still seeing big markets drive a lot of the growth that we're seeing in the sector. And particularly this year, we're expecting mainland China to account for almost 3/4 of the onshore wind capacity that's coming online in 2021. So after the feed-in tariff in China for offshore wind expires at the end of this year, we'll see installations drop off a little bit. But globally, we're expecting installations to hang at around 10 gigawatts per year as other markets come in to fill the void left by the feed-in tariff in China. Now, what I love about this chart is as you move further into the second half of the decade and beyond, you can really see this explosion of color, and each different color represents a different market. So we're really seeing new markets like South Korea, Japan, and Vietnam in the Asia Pacific driving growth as we move on in this decade. But also the US is a huge part of this story. So we're expecting the US to be the third largest offshore wind market globally by the end of the decade. And that's from a point that's almost a standing start today. So here you can see offshore wind installations just in the US. And when we focus down, you can kind of see the scale of this rapid growth that we're expecting to see from about 2023 and 2024 onwards. Now, we're expecting the US to miss its 30 gigawatts by 2030 target. We're expecting 26 gigawatts online by 2030. But then that will be 50 gigawatts by 2035. And initially, the kind of big early markets will still drive a lot of that growth. That's markets like New York, New Jersey, Massachusetts, with very high offshore wind targets. But as we move into the beginning of next decade, we're seeing other markets come into the fray. So especially floating markets like Maine, California, Oregon, we're starting to see those states start to install major large-scale projects. And when we look at the outlook for floating wind globally, you can see what a large role we're expecting the US to play. So it may be other markets like South Korea and the UK that install those commercial scale projects first. But after that, as those states that kind of have to look towards floating offshore wind, if they're going to install offshore wind at scale, states like California, Oregon that I mentioned before, as those states start getting involved, we really start to see the installations pick up rapidly for the US. So in the chart on the right, you can see the ranking of floating wind capacity cumulatively across various different markets globally in 2035. And you can see that by 2035, we're expecting the US to come top of that pile. So what does all this growth mean for the operations and maintenance market? So as the kind of fleet grows, the opportunities will grow as well. So by 2030, we're expecting that there will be almost 500,000 operational onshore wind turbines that require service, and almost 30,000 offshore wind turbines. So that's more turbines to maintain, but also different turbines to before. Turbine capacities are increasing, meaning you get fewer turbines for a project of the same capacity. And each modern turbine is fitted with sensors that gives us data to allow us to operate those turbines in a smarter way. But still, even though the capacity of turbines are growing, the sector is growing overall at such a quick pace that the overall number of turbines is growing as well, meaning that the size of the service market is increasing. So at BloombergNEF, we run a biannual report called the Wind Operations and Maintenance Price Index. So for that report, developers submit us confidential service contracts that they've signed with their service providers. And we aggregate that data to produce a benchmark for our clients. So here you can see service prices since 2009, when we started running the O&M report, in terms of thousands of dollars per megawatt per year. And you can see that the price for a full service O&M contract has fallen 70% since 2009 as the sector has matured and we've learned how to maintain these turbines better. But recently, prices have stayed a little bit more stable, and the participants of our Wind O&M price index are now even forecasting prices to increase in the short term. Now, part of this impact has been around COVID, which has really increased the cost of logistics and shipping spare parts, but also quarantine requirements for technicians that are maybe traveling between markets mean that instantly increases the costs of doing service when you're traveling between different markets. But what's driven this big decrease in service costs? Now, we also cut the data from our O&M price index in different ways to pull out different trends of how service has developed as the years have gone on. And what you can see here is service pricing by platform size. And the chart clearly shows that the larger turbines bring cheaper service. Now, that's because contracts are agreed on a per turbine rather than a per megawatt basis. So as turbines grow, then we're really seeing the cost of doing service on those larger turbines. Even if the cost of doing service on each turbine is slightly more expensive, on a per megawatt basis, we're making big savings. And we expect turbines, both onshore and offshore, to keep growing in capacity. So this will be a key downwards cost driver in the future too. Now, it's not just larger turbines, but larger projects also bring cheaper service. So you can achieve economies of scale on a big project because there are fewer technicians needed per megawatt. And turbine makers are also incentivized to offer cheaper deals if it is wrapped up in a deal for a lot of turbines. So we find that it's over 40% cheaper to do service on a project that's over 100 megawatts than a project than doing service on a project that's between 5 and 10 megawatts. So a real big saving there when you start to look towards those bigger projects. And this difference in project size largely explains regional differences we see in service pricing as well. So projects in North America tend to be very large and the supply chain very mature. So that means that doing service for projects in North America comes out significantly cheaper, over 50% cheaper than in Western Europe, where often project permits limit the size of turbine you can use on a site. And also we tend to see much smaller projects, again, because of permitting constraints there in densely populated countries like Germany, like Italy, like other markets in Europe. But we're also seeing service become a more and more important part of turbine makers' businesses. So Vestas margins on its service business are almost 3 times higher than on its turbine sales. And that's over the past 3 years or so. And margins in the third quarter of 2020 hit a record 29%. So Siemens Gamesa company reports show a similar trend. And while the pandemic has cut profitability a little bit, those service profit margins are still staying far higher than those for turbines themselves. So a growing service business is going to be critical for turbine makers in the coming years, as margins on turbine sales, as you can see on this chart, continue to get squeezed by competitive auctions in some markets, subsidy phase outs in others altogether. So Vestas actually reported that operating income from its service business outperformed that from turbine sales in 2020 for the first time since 2013. So given this profitability, we're also beginning to see an increase in competition in the service sector. So turbine makers are striving to win service contracts on their competitors' machines. So Vestas now services over 7 gigawatts of turbines from other manufacturers, while Siemens Gamesa completed at the beginning of last year that acquisition of 9 gigawatts of service contracts from bankrupt manufacturer Senvion. And it's not just competition between OEMs, but we're also seeing a proliferation of new players that are entering the service market. So we're seeing many more independent service providers that are challenging turbine makers for operations and maintenance contracts. And the scope of these contracts often differs between the type of players that are signing them. And we're still really seeing it's just the turbine manufacturers that are offering kind of true full wrap operations and maintenance contracts, apart from kind of larger independent service providers like Deutsche Windtechnik, which are offering almost similar deals. But we're also seeing a move from bigger players with larger operational portfolios that already do service on their own assets, but now they've built that expertise in-house. These developers are starting to do service for either their competitors in the market, or they may sell an asset to an investment fund once they've completed the development, but still maintain doing the service for those turbines on an ongoing basis. And then the final type of player that we've identified is what we call specialty service providers. So these tend to be focused on a single component like a gearbox manufacturer or a bearing manufacturer. But we're beginning to see these companies more and more contracting directly with the end consumer, so the project owner, rather than just doing business with the end consumer through the turbine makers. So competition is increasing in the service sector. And I just wanted to talk a little bit about offshore wind operations and maintenance, because offshore wind obviously brings very different challenges. And one of the key ones here is bigger turbines inherently bring more risk. Well, growing turbines have been a key driver of decreasing capital costs in both onshore and offshore wind. And as I discussed before, they've also been really key in driving down the cost of O&M. But as turbines grow, each one becomes more valuable, and it becomes ever more important to keep each one up and running. So on the chart here, you can see each black cross here is a turbine model commissioned on an offshore wind project somewhere around the world. So I've plotted this against commissioning year and rotor diameter on the y-axis, which is you can kind of treat it as a proxy for megawatts. And we can see this clear scaling up of turbine technology, which is such a key downwards cost driver. But it means that it's absolutely imperative that we minimize downtime as much as possible to make sure that each one of these super valuable machines that are generating ever more of a project's output by percentage, that they're running the maximum amount of the time. And we really do see this trend continuing. So Ørsted recently scoped in a 27 megawatt turbine into its environmental impact assessment for a project that it's hoping to build in Sweden. So we might not see that project super soon, but it kind of gives you an idea into how the major developers are thinking about these technology trends going forwards. But it's not just technology size that's changing. We're also seeing the scale of projects as a whole increase rapidly as well. So here you can see the 3.6 gigawatts Dogger Bank portfolio that's being developed by SSE and Equinor in the North Sea. And you can see that the area covered by these projects rivals that of Greater London. And I chose London because that's where I'm sitting today. But operating projects of this scale requires a new strategy. It requires a new range of vessels, more technicians, detailed logistical planning. It's really the industrialization of offshore wind operations and maintenance. And you can see that when we look at how project characteristics have changed over time. So on the left, you can see area required per turbine, and you can really see why these projects are covering such a wide area. When we move to 12 megawatt turbines, for example, from what we've seen with 2 megawatt turbines. But also these projects are moving further from shore. We're moving into a new era of offshore wind. And this requires different vessels, expensive vessels. We're moving from crew transfer vessels, which are doing daily transfers, to service operations vessels, which will be doing a transfer maybe every two weeks, maybe every month. Now, these vessels are incredibly expensive to hire, so it's even more important to minimize that downtime, minimize the number of days you're having to hire out additional vessels. So I wanted now to talk about the digital opportunity, because digital technologies can address a lot of the issues and drive a lot of the growth and profitability that we can see as the sector begins to scale up in the future. Because it's an area where there are still real efficiencies to find in operation and maintenance, particularly because we're reaching a point that we've been working towards for a long time, where a lot of asset owners are now becoming a lot more proficient in implementing some of these technologies to make real decisions about their assets. But also many asset owners are nearer the beginning of this journey rather than the end. But data from turbines and computing power are making more things possible. They're increasing generation and uptime and allowing for more sophisticated forecasting. So what does the industrial Internet of Things mean for wind? Well, we're seeing turbines with more sensors and drones that are able to collect data as well. Chips that are growing in sophistication, and so that we can process the data coming off those turbines. And cloud computing and more sophisticated apps are allowing us to make better decisions and organize, process that data in order to actually kind of produce actionable insights on how we should be operating our assets, which is facilitating things like predictive maintenance, asset performance management, and digital twins. So I wanted to talk about two sets of key players that I see for digital wind. Firstly, startups, and that's because a lot of money is still driving innovation in startups, and startups themselves are driving a lot of innovation in this space. So this year alone, we've seen almost $12 billion flowing to startups covering digital technologies. And that's really upping the innovation that we're seeing and driving some of these benefits that we're seeing more and more across the wind sector. But also a lot of the kind of big players are starting to try and develop these capabilities in-house as well. We recently published a piece of research assessing various different utilities on their progress on digitalization. So we analyzed their strategies based on 4 perspectives. So first, focus. So is digital applied only for power operations or for multiple sectors? Second, on the business opportunity. So is digital applied in the utilities core business only, or is it also sold externally to other companies? Third, we looked at how the utility procures digital tech. So does it procure that tech through large traditional tech vendor licensing and purchases, or with more of an ecosystem of partners in which the utility co-develops technologies and invests in startups? And finally, does the utility have an in-house digital expertise, or does it mainly outsource? And we looked at companies across the world, and you can get a picture here of the kind of companies we looked at. And we pulled out 2 trends in particular. So The first trend, we found that utilities are partnering more, and they're also building their own digital expertise. So as utilities have more in-house digital expertise, they're better able to collaborate with startups and consider co-developing and researching technologies. So we're seeing more utilities move into the top right quadrant of this grid. And over time, utilities are learning more about what they can build in-house and what they maybe should still procure off the shelf. Now, a second trend is that utilities are using digital in their business, and some are also using digital to build entirely new revenue streams. So this means utilities have two ways of monetizing digitalization. So the first, which all utilities investing in digital do, so that is to use technologies to strengthen their core power business, reducing operational costs and improving their own revenue. So utilities invest in tools like predictive maintenance and drones to reduce operational costs and improve their own customer service. But this second way to make more money on top of reducing costs in their own core business is to build new revenue streams. So utilities are doing this by developing digital products and services in new areas, by selling software to external companies as well. So we also found that utilities have a more multi-sector focus. So it's not just renewable energy, it's not just power grids, it's also things like EV charging, smart cities, and they also tend to sell the products more to external companies. And finally, on utilities, I just want to show you how they're investing in digitalization, both in terms of capital expenditure, but also human resources. So on the left, you can see reported utility investments on digitalization in terms of billions of dollars. And this is over various different timescales, but it just gives you an idea of the scale of the ambitions with different utilities. And then also the number of employees that some of these utilities are devoting to digitalization. And so in the past year, utilities have increased their investment in digital technologies. So Iberdrola, Enel, and State Grid in China have all committed over $3 billion in varying time frames to their digitalization process. So digital skills are becoming an integral part for most utilities. And companies like NG and NL already have a strong base of in-house talent. So I just wanted to finish by showing this slide again, because it may be simple and it may be kind of child's play for a lot of people in the room, but I think there's still a huge amount more that digital technologies can bring to realize benefits across the wind value chain. And these technologies can play a crucial role in minimizing costs, maximizing production, and ensuring wind integrates effectively in the energy system of the future. So thank you.